Oh man, so a crazy day in crypto. We've got some decoupling, but not the direction which we wanted. We had a crazy day in which Bitcoin fell as low as 28,000. We're now sitting recovered at 29,500. What is going on? What do I see in the charts? Where could we be heading to? I've got some interesting on-chain metrics, which shows an interesting story depending on how you want to look at it, and so much more to break down. Make sure you hit up the like button. Don't forget to subscribe as always if you like my perspective. Considering checking out our course member live streams, Ijaz.uk/member to become a member there. And what I want to show you is that today Bitcoin had a crazy day. It all started at about here on this candlestick. You can see we had a massive fall all the way down, and pretty much if you come into a 5-minute chart, you can see pretty much most of it happened in one 5-minute candle at about 2:15 my time, and it fell quite heavily down to 28,000 before the dip was brought back up. We're now sitting back at 29,500. We've got some decoupling because we can see that the markets are actually having a positive day. Market come back from a long slump, gain steam with the Dow up 600 points. If we head on over to look at how the major indices are performing, you can see the Dow is pumping 1.8%. You've got the S&P up 2% and almost 3%, 2.8% here on the NASDAQ, which remember is the most correlated to Bitcoin because that's where your risk on growth stock trades are being made. So let's try to get to the bottom of this. There's a lot of conflicting messages going around. Let's see what are the issues and what is this decoupling? Is it going to last? And why is it going in the other direction? Let's try to understand that. Now, the first thing we want to do, let's just go through this systematically. The first thing we need to understand is that we had the GDP figures come out, and the GDP figures were worse. It's an estimate figure, but they revised the estimate, and it came in at 1.5 versus 1.4 expected. So it's showing a more of a slowdown than we had expected. We then had the jobless claims, the initial jobless claim figures, which came in less than expected. But that's a bullish thing for in terms of less people were as in less people were unemployed. Okay, so 210,000 versus 218,000 unemployed people in the US the previous week. So that came in suggesting that labor market is still tight. Now, some of the theories going around at the moment are that equities are trying to bounce. I'm not too convinced on there being a long-term bounce just yet. Let's keep that as the first statement. Yes, you're getting a little bit of bounce on equities. I think for equities, this is more of a relief rally. It's a bit of buy the dip happening. Maybe a few institutions are buying the dip quite heavily as well. But I don't think it's here to last because until the underlying trends have been resolved, we cannot expect to see a full recovery here just yet. Okay, we still know inflation is still an issue. We still know that interest rates need to be increased over time. You've still got the Russia-Ukraine issues. You've still got supply chain blockages. The labor market is still tight. I can't see for me a sustained run on equities just yet to the upside. So any rallies we do see, my view on it is they will be short-lived, but we'll need to see how that plays out. Now, interestingly, what we have seen is that crypto has managed to start falling, right? So altcoins were really falling quite badly today. You can see there was a positive day for dominance because Bitcoin was holding up fairly well. If I head on over to the hourly chart, you can see here how quickly the dominance was climbing, which was showing that as markets get more and more fearful, people are rotating across to Bitcoin. That is a known adage. As Bitcoin dominance goes up, it tends to be in periods where actually the Bitcoin price is going down, because it often means that you're in some sort of a bear market or a winter in which people are rotating out of their alts and into Bitcoin. So that's what we're seeing here. But altcoins across the board are still red, even though Bitcoin has managed to turn green now, back at 29,500. You've still got the likes of Phantom, down 2.4% here on the day. You can see that here. Phantom's holding up a lot better in terms of its technical pattern than many other coins because of the move it had to the upside when the Andre Cronje news was announced. So it's managed to come back down to the neckline about here at around the 38 cents mark and rebuild from there. So it's in a better position. Whereas if you look at certain other coins like Solana, they're still they had a far bigger dip here to the downside. You see it goes as low as 41 on Solana. Let's take a look at ADA, and you can see ADA went as low as 46. So congratulations if you're able to pick up that quick candle. It would have been in a 5-minute candle there. That would have been awesome if you managed to pick that up. Now, if we take a look at the liquidations, let's do that. What you will notice is that we had 340 million longs liquidated so far today. So that's crazy. A really big candlestick in terms of liquidations. And that is what you saw in pretty much that 5-hour candle. When you get the price moving so sharply on a volatile asset like Bitcoin, that triggers the next bunch of stop liquidations, which triggers the next set of liquidations, and you can get these massive wicking candles. And you can see that the volume really did come in to buy that dip immediately. And that was a positive sign. These are the things we need to look at. In that 5-minute candle where this wick was bought up, it happened very quickly. And you can see how quickly now we've managed to recover, again suggesting to us that these price points are being defended by the bulls. You can see now this pivot point number 2 is the area we've managed to see a lot of strength, right? We bounced once, came again and again here, and again, and the bulls are coming in quite early at 28,000. Remember, I'm still expecting and preparing for us to head towards 26 and maybe even 24, which is further down our next level of support. And I've explained my reasons looking at a whole bunch of on-chain metrics to suggest so. But to summarize, for me, there are a few key reasons why I think crypto is lagging a little bit right now. The first one I want to say is the Luna saga. Whether we like it or not, what happened with Luna was not a good look, and it has put a dampener on crypto. I definitely think we wouldn't have wicked down to some of the lows we saw, right? Where you saw here, where you wicked all the way down to 25 and a bit. And I still think it has a lasting impact on the crypto market. You're seeing money flowing out of DeFi at a very fast pace. I'm going to show you what impact that is having to activity on the chain. And it's having other complications in terms of projects and just the overall confidence in the market. It was not a good look. The second point, and the second reason I think crypto is struggling a little bit, and it makes us a little bit bearish in the short term, that we could be in this for a little bit, is the fear of regulation. Again, this ties in a little bit to the Luna issue, which hasn't helped this at all, but we know that this fear of regulation continues to be on our shoulder. We know it's an issue. And again, this article doesn't help. US Senator Pat Toomey says terror investors may have been defrauded. And you can see the quote here. The mechanism to ensure the value of UST was very dubious. And then in the second sentence, maybe you've got an argument for fraud. Maybe people are misrepresenting the nature of this animal. So again, you know, this is something that we have to keep an eye on. Is that going to affect regulation? And a lot of people are preferring to be on the sidelines until we get more clarity on regulations. That's another thing weighing on crypto. The next thing is an interesting one, which a lot of people have not thought about. If crypto is correlated, so on the way down, it's correlated to NASDAQ. We've explained why. It acts like a risk-on trade, right? So when risk is off, people sell their growth stocks and they sell their crypto. That was the whole reason we were coupled with the equity markets. However, if equities markets are bouncing, what are they bouncing on? They're bouncing on the idea that we're through the worst of it. In other words, they'll look at this, which is the CPI chart, and they'll see that peak there at 6.5, and they'll say, hang on, are we inflecting down? Are we through the worst of it? Will the interest rates 0.5% hike, 0.5% hike? Is that going to bring it down? And therefore, that was the worst of it, and inflation's only going to get better now. Therefore, they can start to rally. But if that's the case, there's also a narrative that Bitcoin is an anti-inflation hedge, right? So if you're holding Bitcoin as an anti-inflation hedge, do you need to, if inflation has already peaked and is on its way down? Is that not therefore a negative catalyst for crypto? That is another thing we have to think about. And then the final thing, which I want to spend some time going through, is this concept of declining activity. And again, we're going to have to look into some on-chain metrics to really take a look at this. And the first clue is when you take a look here. And what you can see here, this is the Bitcoin total transaction fees as shared by Glassnode, right? They share all these beautiful on-chain metric charts. And what you'll notice here is from summer of 2021, the Bitcoin transaction fee really is low, okay? So it really is low. And by the way, all these charts which I'm showing to you can start to give you this notion that maybe we're entering a bit of a ghost town, right? In terms of on-chain activity. That's the first one we saw. Then you can take a look at the Ethereum mean transaction gas price. Now, bar a few crazy days, such as the Luna collapse and such as the Bored Ape Yacht Club other side NFT mint, you can see that the mean gas price is where we're reaching towards, okay? So again, is this happening because of declining activity? And I think this one pretty much sums it up. When you look at the active addresses on DeFi, DeFi has taken a complete hit. And I think this is a combination of all the things I've just discussed. 1, the Luna saga. 2, the fear of regulation. 3, inflation. calming down, and you're getting this declining activity, which overall really just reminds us that, hang on a second, things are getting pretty serious. We may well be heading for a proper crypto winter. And I know it's not fun to say, but it's better that we're honest with the metrics we're seeing, and that way we can prepare for it the right way. Let's then go on over to this chart, which I want to share with you. And what I want to do is I want to show you this, because this is a really interesting one. This is the Bitcoin monthly returns. And as you can see, if you look at the blue here, there are certain periods. This light teal color here is a 30% return, minus 30% return. This green, the dark green here, is minus 50%. Okay, so the first line is minus 30. This is minus 50. So you can see there are a few instances where we've touched minus 30 over the period of Bitcoin's life, and there's been periods where we've had a minus 50% monthly return. Now, as you can see where we are now, we have just touched the minus 30 level. We also touched the minus 30 level during the December time where we had the deleveraging. But we haven't gone to the 50% line apart from really important moments. So if we can go back, you can see the late 2015 bear market, we got to minus 50% monthly returns. Okay, start of the 2018 bear, we did, and we went well through it in that instance. Okay, we got close, then we touched it at the end of 2018 bear market, we touched it during COVID, we touched it in May to July 2021 after hitting our highs and then falling and giving it back. You guys will remember that. And then now the question is, are we going to bounce here at minus 30 returns, or do we have room to go for a full bear market, and are we going to see things get a little bit worse before they get better here on crypto? So that's what we need to watch out for. And this is what I'm preparing for. This is the data I'm looking at to say, okay, what's going to happen? Are we going to be in for a prolonged period? Are we going to head to 26 and then 24? If so, what am I doing? How am I going to prepare? And ultimately, that's the thing we need to do. The first thing we need to do is we need to make sure we're realists, right? We understand that, okay, if the market is struggling, then we need to be prepared. If we're going to have a period of downtime, and I've shared in previous videos how historical bear markets have played out, you can have 12 months of the price declining from an all-time high before it gets to the bottom. You can then from there have 12 to 18, sometimes 22 months of it just sitting at the bottom before deciding to go on in its next bull run. So you guys have to really decide and be honest with yourself. Like, are you cut out for this? If crypto is going to sit at this level, or if it's going to fall to 20 or 16 or some of these crazy numbers, which I'm not calling for right now, that's not the point. The point from a technical perspective, I'm only calling out 26 and 24. I'm not going any lower than that from a technical perspective because there's no evidence for it. So this is where we have to ask ourselves, are we prepared for this? Are we somebody that if we dollar cost average in at these levels, if we fall to 20K, 24K, are we going to panic? Are we going to panic sell? If we go for a prolonged crypto winter where it's 12 months or this, are we going to sell and be like, oh, I'm done with crypto, I don't believe in it? Because if you are, save yourself the trouble. But if you are a true adopter and you believe in crypto and you understand the bull and the bear markets and you understand how the 4-year halvings work and you've actually studied crypto and you've seen historically this is how it works, then you can get on the train. But if you're not, you're going to be the same people that have done what they've always done, which is they can't be bothered in a bear market, but when a bull market comes in, they go, oh, if only I bought Bitcoin here at this price, right? And the question is, which we need to decide is, what if these prices we're seeing today are yesterday's $1, I could have bought Bitcoin at $1. We've all heard those stories. Or I could have bought Bitcoin at $1,000. What if today's price is that of the future? That's what we need to ask ourselves. And the final thing I want to share with you is I want to come over to the Bitcoin chart, and I want to take a look here at the daily EMA ribbon. So if I bring out the EMA ribbon, it may look like here on the daily chart that we're not making progress, right? So that it may look like, okay, we're just moving sideways. But what you can see is there's this wave coming, which is the EMA ribbon. And I want to use that analogy because what happens is if you're standing there on the beach and this wave is coming, it's going to come and test you now. And two things are going to happen. Either you're going to stand your ground and you're going to therefore manage to work your way back to the upside, or you're going to fall. And that's what we need to look out for, is are we going to manage, are we going to get this? Okay, are we going to get this, in which case the EMA ribbon will go this way and we'll get our cross? Or is the EMA ribbon going to be the reason this turns into a bear flag, which is just a continuation pattern, and this happens to lower levels? That's what we need to look out for. And if you want to look for a clue, you can head on over to the 4-hourly because you can see it starting to happen. Okay, and you can see now on the 4-hourly candles, the reason we're in this channel is we're getting rejected continuously by our EMA ribbon. But the bears have not won yet. They've not managed to push us out of the triangle just yet. So this is an important level here. You can see a lot of defending is happening here. But if you beat those bulls at this point, the longs at this point, the question is how far can the bears push crypto down? So there you have it, guys. A very tricky day here in crypto. An interesting bounce. I mean, you've gone from 28,000 back to now 29,600. Bitcoin is now 0.42 up, where it was a good 4% plus down on the day. So very interesting market. We have to continue to watch it. For me, I'm not dollar cost averaging too heavily. I'm nibbling. And for those of you who are on my course member live streams, you guys will know what that terminology means. It means buying a little bit just to prevent some FOMO. So that's the best strategy for me right now. I want to keep some dry powder ready for lower price points, because I've been saying this for a while now. You know, even I didn't fall for the rallies to the upside. I'm expecting lower price points, and it's better that I expect them and be prepared for them, because if we run back up to the upside, great, right? I've been purchasing, I've been dollar cost averaging, I've been nibbling, like I said, so I've got a good enough position in some of my favorite portfolios. But if we do fall to lower price points, I do want to pick up some more, and that is what I'm going to be prepared for. But the most important thing we need to understand is prepare ourselves for how long this could be. Hopefully it's not a long bear market. Hopefully we're in some sort of a super cycle, right? A lot of people are talking about that, where we can buck the trend and not have to have a 12-month, 16-month, 18-month winter or crypto bear market. But if we are, you guys need to be prepared psychologically, emotionally, and just prepared with your strategy of what you're going to do. Remember, if you don't have a strategy, then you're just playing a game. We're not doing that, right? We've got to have a clear strategy. We've got to know what we're doing. It's got to be written down. I personally love to put my strategy on post-it notes and keep them on my monitor, on my desk, keep me in the game level-headed, so I'm not just going off gut feel or emotion, but I'm going for what I have planned. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. If you appreciate my perspective, consider joining the course member live streams, ijaz.uk/member. Thanks for watching this video, guys, and I'll see you in the next one.